Everybody, welcome. Hi Mary, you alright? It is indeed 7 p.m. or if you like 1900 hours on the 15th of June, and here we are for our clinic or otherwise educational session. Now there's a couple of things that we're going to get through tonight. So I'll run through the notes that I've made and then I'll go off script as we do. Welcome everybody again, and tonight we have another blast from the past with thanks to Brett for the idea to look at price action. Of course, if you learned with me, I recommended much homework on price action and guided you towards some very significant websites as well as free resources, PDF documents available freely online. No excuse for ignorance then really, but always it's good to refresh. So I'll share those links and I'll show you those documents again this evening, but later. Where was I? Yeah, always good to refresh or improve your knowledge on this particular skill set, if indeed you do want to continually improve. There are several patterns I favour, some simple and some a little more complex, but always we use the same things to identify the pattern or the probable result from the price action we're examining at the time we're looking to place an entry. Hi Sakthi. There is much information available on the internet, YouTube and many websites of course, but do they explain it in a non-complicated way that anyone can follow, understand and make solid use of in their foundations for trading skills? Well, we'll dive into my take on the topic with an almost blank chart in order that we can measure, manage and indeed profit from price action alongside our strategies. I also want to talk about wealth building today by sharing Anne's Saturday ponderings and adding my interpretation of some of those towards the end. It really is very good, and I do thank you, Anne, for allowing me share that your writings, and then we'll go deep diving into the charts and the price action. So Anne shared this with the group. She wrote, "Hi Henry, the market," she didn't write hi Henry, sorry, Anne's words. "The market finished where it started. The question is, did you? Friday 12th of June, DAX, the high at the end of New York session, matched the high of the overnight Asian session. Almost 24 hours of trading, millions of decisions and billions changing hands, and yet the market merely returned to somewhere it had already been while most of us were asleep. That struck me as rather odd. We spend so much time talking about movement, markets moving, prices moving, accounts moving, but perhaps we sometimes confuse movement with progress. The market moves every day, so do traders. Some traders made money this week, some lost money. Some made money and then gave it back, and a few kept it, which makes me wonder what actually counts as success. Many traders would point to a profit figure, and to be fair, making a profit matters. But that's only the first battle. The second is resisting the urge to risk it unnecessarily. The third is turning it into something that improves your life, and I suspect each stage is harder than the one before. Perhaps that's why so many traders spend years battling without ever quite winning the war. Interestingly, studies have shown that many retail traders win more often than people imagine. For many traders, making a profit is not the problem. Keeping it often is. Profit is a moment. Wealth is what remains afterwards. A paid-off mortgage, financial security, more time with family, freedom from worry. A dream that once seemed distant, suddenly becoming possible. Perhaps wealth begins at the moment we stop measuring success by the profits we make and start measuring it by the profits we keep. Because a trader can make profits for years and never build wealth, every profit being eventually given back or turned into a bigger gamble. Profit is what appears in your broker account. Wealth is what remains after the excitement has passed. Profit happens in the market. Wealth happens in life. And perhaps that's the point. Today's profit buys excitement. Tomorrow's wealth buys freedom. I thought that was brilliantly written, and I want to remind you all, I've told you many, many times, I keep in my broker account all that I need to be able to trade, the maximum stake that I'm going to trade, plus a little margin. Thereafter, every day that I can, every other day, every week if that's where you're at, I withdraw. And I'll remind some of you, because some of you were there, we met in Heathrow once at a Premier Inn boardroom, just because they had a big fancy one there, and we were going to trade together live, and somebody had blown an account. And I guided that somebody back to not only profitability, but to sensible, what's the word I'm looking for? Sensible wealth, I'm going to say. And the person hated me. Some of you will remember, because some of you were there. It was a big boardroom and we were around the table, and he admitted the story. He told the story. He'd built up and up and up, and then he went and blew about £10,000 in about 45 minutes. And to help him build the wealth, what I said was, you have to phone me after every day. You can text me in the morning to tell me how you feel, but phone me at the end of every day, and these are the results I'm looking for. And when he phoned me on about day 3, I said, that's great, you've done enough to withdraw X amount of money. And he said, but then I'll only be able to trade this much. Yes, but then what you've withdrawn is safe and you won't blow it again. You've shown me you don't have discipline. Show me you can make a withdrawal. And we did that for several withdrawals, I'm afraid, and we set him back several times. But on balance of probability and on the balance of his account, he had more at the end of, I think, 2 months than he'd given away in that 45 minutes. And he was able to say, not only have I built up the account, but I've withdrawn so that there are funds in my bank. And that's my point on the wealth building. Anne's hit the nail exactly on the head. A lot of people build up their account and they build it up and up and up and up. And they think, great, I'm up 15%, 20%, 90%. Brilliant. But if you don't withdraw those funds, they're not really yours. They're not realised until you can afford to make the withdrawal and still trade. So my point on the wealth building, again, with thanks to Anne for bringing that up in the Saturday ponderings, which are bloody brilliant, by the way, as is Paul's writing. Paul writes a very poetic thing, very beautiful. I've saved both on both occasions, so thank you for that. But yes, if you withdraw it, it's safe, it's in your account. I tend to withdraw to, well, you know, I withdraw it to one account and then I send it to different ones. I sent it to a current where I live on it, and I sent it to savings account where I just save and invest. That's what I do with mine. That's how you build the wealth. You withdraw and then immediately put it out of harm's way by locking it away in one of those. Maybe it's a term deposit account. I do have a few of them. They're worth having if you can have them in a country whereby they do give you a reasonable, and I'm not looking for something ridiculous, just a reasonable return of interest. There's the wealth building. Now we're going to dive right into the price action. The patterns I favour, the simple, the not so simple. I'm going though to start by, if I can, bringing into view, again if I can, and apparently I can't. Yes, I can. I'm going to bring into view the trading folder here somehow. That's not it. That's it. E and trading. And the reason I want this trading folder in view is because in the PDF docs, I've shared chart signs. I've shared, where are you? Pin bar trading, profiting with pivot pay. That's actually not as good as my YouTube video, I've been told. But look, the candlestick trading Bible, all of these are about price action. And not only did I share those with you, if I go up and into more, you'll find one that says links, and the links I'm looking for, there you are, links 1. If I scroll down on this document, which is opened somewhere else by the way, we'll scroll down to, where are you? Where are you indeed? This, the patternsite.com. If I go control click on the patternsite.com, Bulkovsky's pattern site, and I always asked you to have a look at this in your lessons with me, because it really does talk about patterns and candlesticks and their relevance. And if you're really, really serious, then you look through those things just in your spare time, if you have any, and it will help you. Notwithstanding that, we're going to look between 2 p.m. and 4 p.m. of today at the NAS. This is the NAS, and we're just going to look at the price action of today, those 2 hours, because those are the 2 hours we spend together on a Tuesday and a Thursday trading, and I think that will be the best starting point, if you like. As you can see, I've no indicators showing on the top and only the MACD on the bottom. So the question we ask of the MACD is, line, are you above or below zero? It's above, which means that that market is bullish regardless of what the EMAs may say, regardless of what the higher time frames may say. That market, according to the MACD, is bullish, and we will take that on an as at now, or in fairness, as at right then, basis. From 1406, the market was bullish. And we look at 1406, and right away we identify my take on tweezer bottoms, and it's the perfect tweezer bottoms in there's that one red one and one green one, and they are side by side, and the green one is on the right, meaning those are tweezer bottoms. If we had red and green at the top with red on the right, that would be tweezer tops. Note from both moves, the tweezer bottoms does give us a move up, and the tweezer tops does give us a move down. How far the move is, how big the move is, don't care, not interested, don't have a care in the world about it. But what comes after that? Well, immediately after the tweezer bottoms, we get quite a bullish bar, an open at the bottom, a close at the top, barely any wick whatsoever. A bit of low test indecision, a bit of low test bull, but inside bar, and then a breakout, again quite bullish. A high test bar, not very big, okay, so not a big issue then, but a pullback and another move up. Another tweezer bottoms, this time with a bullish engulfing bar to the right, and it moves up 3 green bars and a red. That's interesting, because in a moment you're going to see why it's interesting. This bar then is 1430 and the US Open. And there are 2 questions to ask of it. What are you? Where did you come from? Where did you go to? Where are you going next? That's 3 questions, isn't it? There's probably many questions. If you all remember back to when we had, and Rosa, you'll remember because you gave birth to it with me, the strategy Inspect the Morse, and it was designed to have people question everything. So we've got a low test bar. We've got an open, a low, a high and a close are the same. It's also bullish engulfing. Bullish because it's green, and engulfing because the low and the high are bigger than the low and the high of the previous bar, which is also a low test. Now when we examine those 2, high test, low test, what does that mean? It's indecision. And bugger it, Sackthese jumped the gun and said also a fib. Yes, it is indeed. One of the things I wanted to point out is that the low of this bar rejects, if you look at the low there, the level to the right, look at that, 30,342. So it failed to break one of our key levels, big round numbers, 40s, 60s, within the space of the big round number. So the MACD says this is bullish, and as Sackthie rightly points out, and does everybody, oh bugger it, does everybody know why I'm going to say that we expect this market to move up? And I'll just put it on now. Again, you've jumped the gun, and I appreciate that, Sackthie. I do think it's great. I really do. Because look, here is a run of colour. Green, 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 red, which means there's an active fib. We reject the 61.8. We immediately go above the 38.2. and price goes tally-ho chaps and off up to the 200% level here. Or if you like, let's see what the pip count would have been. Woulda, coulda, shoulda. Well, it could have been off the 38.2. It could have been on a breakout of that high. So we'll go with the 360 because it's a bit in between then, isn't it? It's above the 38.2. It's below that high, and it's just somewhere acceptable that you all know. Remember, we placed those levels, and then we come back, we break below his low. I'd expect the big round number to be a worst case scenario here. So there's potential for a 40 pipper there, a maximum of 55, a minimum of 35, but about 40 pips is very doable from the US breakout, from the US Open on the NAS. We then get a new fib. We can move him up to there. We can move him up to there. And the reason we're choosing him and not him, because he's the first in the run of colour, and he, yeah, you don't care he's lower, he's still the first in the run of colour. We reject the 38.2 and we get a continuation from the big round number up to above a 40, back below to a 40. There's another 40 pips possible in those two bars. And then another chance to break up, because it doesn't break the 50%. So there's an ugly, but not quite fully a W, an X, A, B, C, W. You could, I say, call it a W because it's a double bottom. Two B's are a thing. It's a double bottom after 50%. With, does someone else want to tell me what do we see at his low? Someone tell me, what do we see other than the pivot off of 50% right there? What you got? Anybody? Tell me. Go on, Saki. You spotted the fib. What else is right there? Right there.
Tweezer bottoms.
Tweezer bottoms? That's not what I'm looking for, but I'll give you it. It's the double bottoms here. There is tweezer bottoms. Yeah, I'll give you that. But what else have we got there? Go on. I'm going to draw it on for you. What represents that, please? What represents that, please? What represents that, please? Divergence, and some divergence within the indicator, because we've got higher lows over lower lows within the indicator. And then we get that break of the big round number there and a run up again up above. Like, he's gone way beyond 340, 30,440. So there's probably a 60 in there. In fact, let's just have a look at what his high was. His high was 64. So you got a chance to come out around, I don't know, 60. From the big round number. There's another 50 pips in that one. So you've had a 40, a 40 and a 50. 3 trades, 80, 130 pips now so far. Nothing wrong with any of that. And then you've got an inside bar and a breach of the inside bar and yet another run up with one of those RTF type continuations on the MACD. Now I know that's looking at what you call it, indicators quite a lot there. But if we just look at the price action now to back it up, clear that off. And Robert rightly points out tweezer bottoms. Where would you enter on the tweezer bottoms with such a BFO, a big F off bar? And excuse my language, but when we look at a big bar, I do want him on there for a minute. We know he's a big bar. Just how big is he? He is a 50 pip bar. He'd be frightening. But look at the numbers to the right. Look at the numbers to the right. There's a big round number. Does this green bar go above his close? Do we move up then? And is there a chance to take pips up here? Yes, there is. So we wouldn't enter at the close of the bar. We'd enter during the bar. And it is tweezer bottoms. If we did wait for the close, there's still a chance to take some pips in there, but you're looking at less pips and you wouldn't get out at the top. You'd be here or you'd be sweating and then you'd be safe. I think by now you all know that my big round numbers, 30,500, are still a thing. They're never going to go away, the 40s and the 60s. An indecision bar, a big wick at the top, a big wick at the bottom, and an open and close that are very close by after a low test bar. So we test the low. We don't really want to go any lower. That's what he's saying. Then we get an inside indecision bar. What happens with the next bar? We break out above. So right there, you have an ability to go long. X marks the spot. You could go long right there with an invalidation or stop loss at this recent swing low. And what would you be looking for? Well, if we're only looking at price action, we'd be looking for a reason to get out. Higher low, higher low, higher low, high test bar. So in this bar, we'd have our finger on the button, but it stays a higher low, another higher low, another higher low, still a higher low, still a higher low, still a higher low, and out. This is the reason to get out based on price action. What else is the reason to get out? Higher highs, lower highs, with higher highs over lower highs to boot. So the move coming that is a downward move, rejecting the 30,500, probably going to be a big one. And if we looked at 30,500 with divergence, the rejection of a line and a signal, there's 60 to 80 pips. I mean, 80 is a bit of a stretch, but right there, there's 60 pips between here and here, there or thereabouts. And again, it's just on price action. We're not looking at indicators. We're looking for reasons to trade. I didn't need to draw the fib to know that there was a fib there. Indeed, Sakti's been with me long enough to know that there's a fib there based on the fact that there was 3 greens and a red, and we can look at it and go, look, there's the high, there's the low, halfway is about here, and there you go. At a glance, we think it's about halfway. We now know since we drew it that it nearly touched the 61.8. Nevertheless, it's a bullish fib and it climbs. We've got a low test bar, but we breached the low of the low test bar, so as a worst case scenario, we're out. We've got a potential pivot. Remember, we'll only know it's a pivot if we've got something else on screen, like these higher value EMAs, and we use them. When we look now, we can see, oh look, a double bottom. Double bottoms are a thing. Now we know that this is divergence and the rejection of a line. And you all know, according to my pivots, we must go above the close of the previous bar to be able to go long, with a stop at the low of the previous bar and tally-ho chaps for more pips. There's the next one with the breakout of the inside bar. If we look here, we've got a bearish engulfing bar and a breakout below the bearish engulfing bar. We've a sell here with a stop there. And if we only looked at 2 times the target, we'd have to do something like that to say there is your 2 to 1. And I'm not trying to draw a backwards 3 there. I'm just trying to match the size of this little bracket with this bracket and this bracket. So your 2 to 1 is roughly where you should be coming out anyway. So we only need to know about, I don't know, 3, 4, 5 patterns. You all know I like me little W's. I like double bottoms, double tops. I like head and shoulder, inverse head and shoulder, obviously. I mean, a W, an M is the opposite of a W. I still like those. And a teacup. I particularly like teacups. And can anyone see the quite pretty teacup that's on the screen right there now? And still allows yet one more trade. Anyone want to give me a time where the handle is? Give me a rough approximation of where is the time for the teacup of the handle. I'll give you the clue. We're still only looking between 1400 and 1600. But there's a teacup on there. And there's a handle. And there's a long after it, with good reason. 16, says Sakti. You're close, but no big fat smoky thing, I'm afraid.
2600?
2600? What? What's that?
26. I'm sorry. I'm on my phone reading this while I'm in the driving. I'm sorry.
Okay, go on. I'm going to draw it for you. It's there. Look, that's the handle. And there is your teacup. There's the handle. And look at that. I'm going to clear those drawings for a minute. Clear all drawings. Look at that low test bar. Isn't he pretty? Aren't you a beautiful little thing on the back end of a teacup? Low test bar. Breakout above the low test bar. Tally ho for more. Price action pips. Peter's got it. Peter T, 54. You there or thereabouts, mate? 50, I'd have said, but 54 is close enough. I'll give you that. That's the handle right there. Sakti's also using the phone. Fair enough, mate, no problem. You're close with the 1600, but that is the one I'd give the teacup because it's pretty because of the double top type thing there. and then this little handle with a low test bar, and that's the thing to pay attention to. Low test bars, high test bars. He's low test. Why? Open and close are close together, and then there's a big wick at the bottom. We like that. Over here, look, open and they're not that close together, but there's a big wick at the top and then a big solid body at the bottom. He's a high test bar, and we say he's another high test bar, and he fails, and tally-ho chaps, off we go. This is the thing we like, when price action agrees with our indicators. High test bars with divergence within the indicator. Well, thank you very much. Don't mind if I do. And you wouldn't mind if you did, would you? Over here, look, there is another example of tweezer tops. A high test bar, a high test bar, another high test bar, and it's an inside bar. The green's on the wrong side, but I don't care. It's still a high test bar. So it's weaker than the last one we watched, and tally-ho, down we go. One of the things I'd be worried about seeing this is I'd be asking, is it X, A, B, C? Is it the B to C leg of a W? And in fact, we get X, A, B, C, B, C, W. It is, but just someone knows how to write W, just forgot how to stop writing W. I want one of them. And we go X, A, B, C, B, C, W. You see? Someone knows how, or maybe that's the X. It's still, you know, a W. You just have to be aware that your ABC, remember ABC, everybody, always be checking. The minute you stop checking, you'll stop watching for it, and then you're going to miss something, you know. When we use, and remember that little quote bubble I shared some centuries ago at this stage now, price action, when it agrees with indicators, great. If it disagrees with indicators, then we're probably banjaxed. And banjaxed is a very typical Irish word. I'm wondering if I have that quote bubble to hand here. I think I might, because it would be an ideal time to share it. Is it in there? Are you in there? I think you are. No, you're not. Well, it's somewhere or other. There is a quote bubble somewhere that I've somehow lost for the moment. Won't mind, don't care. Are you? There you are. I found it. Yay! Yay me. Look at that. If only I had a bit more of a brain. It is. I wrote this. Evidence provided by price action, unsupported by evidence provided by indicators, or indeed vice versa, leaves a trader open to ambiguity, where an opinion may be formed. Opinions are the enemy of a trader and a curse upon the charts. Remember, Tau, take away opinion. That's what we're trying to do here. And now with a minimal click, 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 I'm just going to place on the majority of our higher value EMAs, because then not only does the MACD tell you that we're ideally looking for a long at the open, but the EMA pivots tweezer bottoms off our white line. You all know what the white line is. Tweezer bottoms off our white line. You all know what the white line is. Whatever about this one that we said we weren't sure, even though it's a fib, we're sure it's a double bottom, and now we're sure it's a pivot off of one of our significant EMAs. And then the wedge pattern, a break above this inside indecision bar, it's a pivot off one of our EMAs, and tally-ho chaps, off we go. Then finally we break through them. Another pivot. Remember we looked at this one, an indecision bar, a break above the indecision bar. Worst case scenario, you're out to sell. But ideally, in an ideal world, you're looking at, and I don't know where my drawing tool has gone. Anyone see where my drawing, there it is. Okay, I've got it back. So what we're looking at here is massively higher lows over massively lower lows, and the reason to take some more pips on the long there. Indecision, break above the indecision, pivot. Now the price action is being supported by some level of indicators, even we don't have that many on there. These W patterns now, this strafe along this EMA along here, with yet more divergence. Higher, lows, lower, lows across there, and there's higher, lower on the line. So there's a little bit of divergence within the indicator for the teacup from the price action long off a low test bar. And if we just measure the pips available from that last one, we could say, well, it's you, isn't it? Because you broke out above his high and he's the low test bar that pivoted. And where have we gone? We've got higher lows, higher lows, higher lows, and then we haven't. There's 26 pips available in 1, 2, 3, 4 minutes. Right there, 26 pips. It's 10 pips off a gate. That's what it is. So price action. Hopefully I've done it justice in a very, very short, a glance at a 2-hour data set on the chart, if you like, without indicators. Yeah, we can do it without the indicators. But when price action agrees with indicators or vice versa, then there is no ambiguity and there is no reason to doubt what you're seeing. There might be a reason to doubt what you believe because we are human and we do that. We're trained to do it because Vladimir Putin tells us something and we all think, oh, he's a politician, he's probably right, isn't he? Or what's that other fella's name? Keir Starmer or Donald Trump or what's that fella's name? We've got Michal, what's his name? All of these politicians, they've been lying to us and to our dads and our granddads and our mothers and our grandmothers and our, great-grandfathers. We've been told lies all our lives, not just our lives, but historically we've been lied to, so we are naturally suspicious. And that's okay, that's right. Just because I'm paranoid, it doesn't mean that they're not out to take my money. So the indicators must agree with the price action. Price action tells me a story. Indicators tell me a story. Now, that's like having two interrogatees. Is that the word? You have two people strapped to chairs in different rooms. One of them is Adolf Hitler. The other one is, Keir Starmer. You go in and you slap one senseless and he tells you a story. You go in and slap the other one senseless and he tells you the same story. All right, you're telling the truth. It's safe to assume I can buy that. But if one's telling you a different story, it's not safe anymore because their lies aren't the same. And that's what you're looking at with price action and indicators. Again, I hope I've done price action justice. I want to do this little bit, look at a high test bar, a low test bar. The two together would represent a 2-minute bar. This bullish engulfing bar wipes 1, 2, 3, 4, 5 minutes of data, and it thereby forms a wedge. It's a breakout wedge. So you can begin to assimilate or to build data from not only 1, 2, 3, 4, 5 bars, but from multiples of them. When you get a fractal, another thing is a fractal. Well, that's tweezer bottoms, but there's a fractal. Look, 1, 2, 3, 4. I know he's a bit lower. It still works out as a fractal. We can have, if you look at the palm of your hand, hold up your left hand and you'll see a bearish fractal. That's your middle finger, that's your ring finger, that's your thumb, that's your ring finger. Oh, did I say ring finger for that? That's your index finger, that's your ring finger, and that's your little finger. That's a bearish fractal. If you turn the left hand down so that your middle finger faces the ground, you've got a little finger, a ring finger, a middle finger, which you can happily stick up at, who's it, Ellen? Mark Carney, by all means. Turn it the other way up. And then you've got an index finger and a thumb. We should indeed give that one finger right there the other way up to all of the politicians. None of them help us at all. Excuse my political rant there. But again, they're all telling us such different stories. The chart, however, is based, if you're following me anyway, it is based on mathematics. And mathematics cannot lie to you. I've said this before. If a spaceship landed in my garden right now and I wanted to communicate with them, I'd have to communicate in mathematics. And for me, the best way to do that would be to draw a circle like this, obviously a neater circle, and then go like that. And that means pi, isn't it? Pi, the radius of a circle, 3.14159. right? That's pi. If I drew that, we could begin to figure out a language together. Unless, of course, they were from Liverpool, because then it means they've nicked the bloody spaceship and the space people were idiots enough to land in Liverpool first, you know. That would ruinate the whole deal. We'd speak proper Scouse together then. You know what I mean. So there you go. That's my take on price action and my take on building wealth. Withdraw, withdraw, withdraw. Do it often and regular. That's the right way to do it. Any questions, anybody, on price action or wealth building? Hopefully I did that justice. There's a nice low test bar there again off a level. Thanks for that, Danny. And with divergence, lower, lower, lower lows, higher, higher lows, over lower, lower lows. Divergence, a low test bar. Break out above the low test bar. Be a little bit patient and you've got pips. That's it. It's not rocket science, really. I'm glad you all spotted the teacup, or I'm glad we got a teacup. We got a funny looking shoulder, head, shoulder, and a little move down. We got a funny looking W. We got a few things in there that were worth looking at. High test bars, engulfing bars, indecision bars, low test bars, fractals. It sounds like a lot, but if you watch this video a couple of times, maybe click on like once, you'll probably find that it's not really as complex as you might have thought first. And really all you want to do, I'll give this advice again, I've given this to several people in the past. Sometimes you just want to sit and look at the chart with no interest in placing a trade whatsoever. And then you learn. And in that absence of confusion, the absence of pressure, you're not in a trade, you're not looking for a trade. No pressure whatsoever. But that gives you absolute clarity for, what's the word I'm looking for? For learning. Claude says, maybe do it live for a minute before you go. Oh, you mean like the live charts now? Like the as at now? Well, we've missed a good one now, haven't we? Look at that. Low test bar, inside bar, breakout. Inside bar, breakout. We've got a bit of range now. Someone want to tell me why we've got range? Big round number, too bloody late now. It's breached it. We breached the big round number. What's our next problem? This double top. What's our next problem? That double top, that double top. Why that one? Because that's a high test bar. Why that one? Because that's a high test bar. We need to hold on to the big round number if we're holding it. If it doesn't, you're out. But you would have gone in back as low as here, Claude. Why? RTF. And you're going to say, oh, but that's not price action. The breakout of the inside bar, indecision inside bar after a low test bar is, and the RTF confirms it. For anyone who's not familiar with our terminology, RTF stands for reverse trigger finger. It's not a hopper, the line hasn't gone through zero, but it is a reason. And there you go. If we added some of our higher value EMAs, there you go, you'd have even more reason now. I'll bet you there's a pivot in there somewhere. What did you... Ha! Look at that. Pivoted off our red line. Well, thank you very much. You know, it gets more and more simple the more... What was the words? It's funny, isn't it? That's the words. The more I practice, the luckier I get. It gets so much easier the more practice you put in. Note we struggled at this double top. Note we're struggling at this double top. And are they double tops? Well, they are because he's high test. They are because he's high test. They will be because he's high test. Yes. But should we go? Looks like there's a bit of divergence there at the minute. I'd be seriously finger on the button if I was in this. And as you all know, I would really want the T2B2. But where would I be looking for? 640. So here it is. It's 1938 hours on the 15th of the 6th. If we end this recording and you come back and watch this recording at some stage in the future, you'll be able to scroll back to see if it did go to 640. It is a W. The problem is C is lower than A, and that's the problem. It means that D will probably be lower than X. We'll just draw the W so that people who don't know can see what we're looking at there. Oops, I meant to him. Oh, yeah, banjaxed that now, haven't I? So D's over here. C is down there. That's better. There you go. Now it's not so banjaxed anymore, and B, I meant to move him to there. That's what I meant. The problem with this is C is lower than A, so D isn't really that high. I think we might already be at D now. We'd have to watch for a lower high here or a breakout below a low, but that's what I'd be looking for because C is lower than A. D's banjaxed it. Finger on the button, says Sakti. You're absolutely correct. But there you go. There is a W, and it's a pretty one too. It is what it is. Off a 560. Look, we've gone to 564. We looked at the EMAs. We saw the divergence. We got lower lows. We got higher lows. There is divergence. There's some divergence within the indicator too. So when we look at the low at 560 and the high at 610, there's 50 pips up there that it's done. You know, very, very doable. I would suggest that the trade based on price action is from there, the breakout above that inside bar, and the higher low. If you read Elder's divergence, to breaking below his low, it's about there, so it's about 30 pips. That would for me be the trade if we were trading, of course. That's it, Sakti. Yes, well done. Alrighty, I will end it there because we're 40 minutes in and I do want to get the recording uploaded, so I'll say thank you all for watching. Please trade safe and I look forward to seeing you on the next live session. Thank you, and bye bye.